Hello guys, Ethan here. Now, recently in the group, we have made a lot of announcement on what we will be changing for our upcoming robots. So recently we found one big problem and we have to solve it immediately, which is if we have a robot with a 70% win rate, we cannot only classify this robot based on it is low risk, medium risk or high risk. So since it is a single robot, the portfolio that it will turns out is something like it will could be either win a bit, lose a bit, win a bit, lose a bit, and that is by nature. But on a worst case scenario whereby there is a black swan event come out, a single robot will encounter a problem whereby it will have consistent winning at first, and at one point it will straight away back all the way to zero, which is something that we don't want to happen. And I was thinking that if we apply a 50% cut, it will also take a lot of time for the robot to climb back up to the initial balance stage. So what we are thinking is that instead of just relying on a single robot, I take the approach from unit trust, mutual fund approach, whereby don't rely on a single robot, but a group of multiple robots together. Now, the idea is that when we have a group of robots together, it is what we call as a portfolios of EAs. And we can come up with a robot setup whereby in a single account, which is, let's say I have a $1,000 capital account, and within this $1,000, I am using 5 low-risk robots, and it could be trading on stocks or Forex. Then I can have 3 mid-risk robots, and I can have 1 high-risk robot. So within this $1,000 capitals, there is 1 robot that is doing super high-risk trading, there is 3 robots that is doing mid-risk, and there are 5 robots that is doing low-risk trading. Each of it trading on different asset and different market type. And the advantage of doing so is that whenever we have different type of market, like for example, stocks, Forex, gold, JPY market, cryptos, a lot of different type of market combined together, the advantage is it has very low correlations. What does that mean is that when the black swan event happens on stock market, it will less affect on Forex, it will less affect on cryptos, etc. So we need to find different type of strategy that have low relationship between each and another, so that our portfolio can be generalized toward market most of the situations. Even the black swan event come in, even the worst thing was the robot, let's say the high risk and mid risk gone to be zero. At least you have low risk robot back up the entire portfolio. Make it very simple to understand. You have 3 robots, 1 down, 2 still up. So that is the advantage of having multiple robots, so that our portfolio can be long-term, more profitable and more consistent. So in a group, we have been announcing the new way of doing robot trading, whereby we will not rely on a single robot nor single person to operate on robot tradings. But what we will be doing is we are having everyone into the group, regardless that today you have experience or not, you have used robot or not, everyone will come in and share a different insight to the market, so that one person will get tunnel vision, multiple person in the group can see different perspective of the market angle. Concept like this, I list out to be 5 category of people, whereby it include developer, researcher, trader, strategic investor, and lastly, investor. So the concept is like this. So today, alright, I will launch my robot out, and the total robot that I have right now with me is 264 EAs, which are all the robots that have been used for the past 7 years, from Forex, gold, cryptos, S&P 500, stocks. Also, the robot is what I have been using for the past 7 years. It's been profitable, but on a single market itself, there is a risk. So that we need to diversify it. I am the developer. I will just keep on develop new robots and put into this portfolio, right? We call it as a group, the list of robots for you guys to use. Next, move on to researcher. So the purpose of researcher is to research what are the right mixture between robots so that it can become profitable. So for example, portfolio 1 it mixed between Forex and gold trading together. Portfolio 2, it mixed between crypto and Forex. Portfolio 3, S&P 500, gold and cryptos. By mixing in such a way, we are diversifying the trading portfolio, not just focus on single market, but on multiple market. Next, trader is the one that knows how to trade, is the one that knows the strategy. It will take the idea here to form EAs, right? A group of EA. For example, portfolio 1, gold and Forex, right? So on Forex, the trader could choose 3 robots that may be trading on EU, GU, and USD JPY, for example. These 3 different strategies will have slightly different entry and exit. It will not be the same robot. It could be robot, we call it robot A, robot B, and robot C. But all these 3 trading on Forex. Then it chooses robot D, E, F. That specific trade in gold market only. It could be one is doing scalping, one is doing swing trading, one it could be doing news trading. Doesn't matter. As long as the portfolio end up, it can achieve such a concept whereby a single robot result could be like up and down, up and down. But when all of the robots combine together, win-loss plus, it forms a much consistent line of average trading returns. That is the purpose of what we are doing here. We want to combine all robot results into a consistent line of performance. And by doing so, this itself is a very, very valuable asset. So this thing will not just happen here, but will happen on portfolio 2, portfolio 3. All of this is using robots coming from these 264 EAs. Now, coming back to the point of where investor and strategic investor come in. Now, by the name suggests, investor is the one that put in money to auto trades, which is focused on done for you. The investor will just need to know what is the right ROIs, what is the drawdowns, what is the win rate that have been tested by the trader. Among these 6 robots plus together, what is the average ROI, what is the average drawdown, and what is the average winning rate. And investor will have a choice to pick the right portfolio to go in. One last thing, strategic investor will not just invest money, but they will also invest EA back to the group. Alright? So the difference is that investor is the one that just see the result and just put money for the copy tradings or for the investment for themselves. But for strategic investor, they will do a little bit more contributions into the community, whereby if just solely depend on developer, it takes time. But if you are a person that's been using robot before, I surely knows that you buy robots somewhere else in the market. And if you don't mind, you can share within the community so that we have better choice of robot and you can have better performance later on. Right? So it's a win-win situation that we want to build within the community. You can see here, what is it in it for you guys? So I put it in such a way. If today you come in as an investor, will be very easy. You know how the portfolio works and you know who to find. So let's say that you are finding for portfolio 1. You can clearly see that it's formed using 6 robots, and within this 6 robots is traded on Forex and gold market. And within these 6 robots, they will also be classified as a high risk, low, and mid risk, for example. It's well classified rather than a single portfolio, you have multiple portfolio. The example that I give in the group is when you're trading a single stock, the result is volatile. But when you trade on multiple stocks, 500 stocks all bundled together, that will be S&P 500. Much more consistent, much more predictable returns. That is what is being done here. Strategic investor, they invest in EAs, which is they contribute the EAs to the community so that they can earn much more better returns within the portfolios. For traders, the straight benefit for them is they are able to backtest more and more robots that fit to themselves. Maybe the trader itself could be a portfolio that's super high risk, pure, go for let's say crypto and gold all together. When he build, he can use for his own one. And he is the one that knows the most. Researcher is the one that may have not much time, but having a very good analytic skill, that having a right sense of market, market right now should mix Forex plus stocks because of crypto right now is not so good, for example. So researcher is giving the direction of the portfolio, what robot should add in, what type of robot should pull out. Finally, the developers is developing the robots in exchange with the traders. So for example, today you have ideas that have been manual trading pretty good and you would like to build it Now, that is by developer and trader connections. I will connect both of you guys together so that when you guys build out a robot, it will be pushed into the community as well, and everyone will get benefited. Now, there are a lot of things that I can explain from here, which is our newly launched alpha community. We will talk more about this in the next video. That's all for now. Thank you for watching.